Well, it's official. Housing affordability has reached its lowest point in more than 30 years. The average home buyer has to put down a whopping $127,000 to buy the typical home of $360,000. This is according to a recent data analysis by Zillow, and love 'em or hate 'em, Zillow has the data to back up this claim. The Fed is keeping interest rates high where they are, with no plans for any reductions until at least 2025. House prices have gone up significantly faster than wages have. So this means when my daughter's ready to buy her first house, she's probably going to have 3 to 4 years worth of her salary in the bank just to be able to put down the down payment on the house. That doesn't include food or anything else. That is her annual salary. Does anyone besides me think this is completely insane?
I mean, clearly interest rates do affect the affordability of housing, though.
We're going to have an entire generation of people who will likely never become home buyers anytime until they're middle-aged at the earliest. This will probably be the first generation of people where they are less well off than their parents were since the Great Depression. And this is depressing because as parents, we all want our kids to have a better life than what we had. We want them to have more success and less struggle, and that is not looking very likely. And it doesn't seem to matter whether they want to buy a home or rent. National rent prices have gone up 24% over the last couple of years, but in certain metro areas like Tampa, they're up 44%, 35% in metro Atlanta, just in the last 4 years alone. So what is causing this housing affordability crisis?
It's me. Hi, I'm the problem, it's me.
Well, I have a couple ideas. First, the Federal Reserve has kept interest rates artificially low for years and years. When I first went into real estate in 2005, a typical interest rate was about 6%. And then they went up a little bit over the next couple of years. But then the housing market crashed and it took years to recover. Homes that were worth $500,000 in 2006 were worth less than half that by 2012. I sold nothing but bank foreclosures and short sales for years, starting in 2007, 8, 9, 10, 11, 12. People were just walking away from their homes. Imagine buying a house for $700,000 and 5 years later, it was worth $300,000. Your monthly mortgage payment was double what it would cost you to go rent something. People were just like, screw this, I'm out of here. They picked up and moved out in the middle of the night, stopped paying their mortgage payment. The bank had to foreclose on the house, and the entire market was flooded with foreclosures. But slowly but surely, the market started to regain strength and recover. And part of the reason why that happened was because the Fed started lowering the interest rates. By 2012, 4% was pretty typical, and they just kept going down and down and down until in 2021, people were getting 2.53% interest rates. This, of course, caused huge buyer demand, which was what they wanted. But what happens when there's lots of demand and little supply? Prices go up. And oh boy, did prices go up, especially in areas where people were flocking to post 2020, where they could have a great quality of life and a lower house price. Little did they know, all of that moving was just going to drive house prices up more. But it also greatly increased demand from institutional investors, companies that were snapping up tons of single family homes because they had access to almost unlimited amounts of credit at very low interest rates. And so with this came the rise of the entire neighborhoods being for sale. Companies that came in, they built out a subdivision, but never put any of those homes on the market for sale at the end. Instead, every single one of them became a rental property. 50, 100, 200 homes at a time, all becoming rentals, which then drove up the price of the existing homes for sale even further. Now, I have nothing against homes for rent. In fact, if I were in the market to rent and I had a family and kids and dogs, I would much prefer to rent a house than to rent an apartment building. I would love to not share walls with neighbors and make as much noise as I wanted and not have somebody pounding on the ceiling because I was being too heavy-footed walking around with my high heels on. But when institutions own 100,000, 200,000 homes, I think it's safe to say that they're doing it for profit, not because they're worried about how that's going to affect anyone else and affect the young person's ability to move into their first home when they get married and decide to become a homeowner. They just don't seem to care that they're making homeownership unaffordable for a huge portion of Americans. In fact, in the fourth quarter of 2023, more than 25% of all home sales were sold to investors. MetLife Investment predicts that by the year 2030, institutional investors could control 40% of all single-family rental properties on the market. It's gotten so bad that Khanna, a Democrat in California's 17th district, is sponsoring a bill called the Stop Wall Street Landlords Act. In an interview with CNBC, he said, "What's outrageous is that your tax dollars are helping Wall Street buy up single-family homes." And did I mention that Khanna is a Democrat? So is it possible to put the genie back in the bottle and fix this housing affordability crisis?
Can't put the genie back in the bottle.
Recently, the Biden administration said that they wanted to help, and I'm sure the fact that we're only 4 months out from the election is total coincidence and has nothing to do with it at all. The U.S. Department of the Treasury wants to provide $100 million to help solve the housing affordability issue. Now, where exactly is that money going to come from? They weren't really clear on that. But isn't the alarming amount of federal spending over the last several years, which is what caused inflation to run rampant, isn't that kind of what got us into this situation in the first place? And is throwing more money at it really going to help? They also have some plans to offer homebuyer tax credits. Cardone recently tweeted out, or is it X'd out? Are we still going to call it tweets even though it's X? He said, "Is Joe dumb, or does he just think his constituents are? Or maybe this is simply a problem with career politicians who have never actually paid bills, run a budget, or managed their own money." Ouch. He stated that a $35,000 annual mortgage payment would need $5,000 in insurance each year, $5,000 to go to property taxes, $8,000 in private mortgage insurance, PMI. That's $63,000 over the course of the year, which becomes $1.59 million over 30 years. And that's provided there are no increases in taxes, insurance, and maintenance on the property. The median monthly mortgage payment is up 78% since 2021 to now $2,894 per month, plus insurance and property taxes and PMI and the down payment times 360 months. So what does our president propose? A $5,000 tax credit. Do the math, Joe. Dang, that was brutal. And entirely accurate, too. In doing my research, it sounds like other countries like Canada and Australia have tried similar tax credits, but it really didn't work out for them as a long-term solution. But it sure does sound like you're trying to do something good in an election cycle. Now, when I read this one, it really set me off. Mike Ketchmark, one of the attorneys that was representing the Sitzer-Burnett's in the big case against the National Association of Realtors and RE/MAX and Keller Williams and lots of big brokerages, was interviewed and said, well, if you don't have enough money to buy a house, just go get some down payment assistance. There's plenty of those programs out there.
This is not true that first-time homeowners are going to have a problem. There's a program, and you have it out in Massachusetts, and you have it in Missouri. It's around the country for first-time home buyers. In the state of Missouri, first-time home buyers who make under $140,000 a year in household income qualify for a grant from the state of Missouri where they can have a certain amount of money that they can use for anything they want. If you live in the house for 7 years, you never have to pay it back. And you know what they can use that for? They can use that for down payments. And you know why it's underutilized in the state of Missouri? Because agents and corporations like the defendants in this case, they're not training the first-time home buyers to use those programs and utilize those programs. It absolutely exists. There's all kinds of systems in place. In fact, the expert witness in this case came in for the defendants and testified, and he admitted to the jury there's thousands of programs like that for first-time home buyers. And you know what also would help for first-time home buyers? If the system wasn't rigged where these commissions are so high that it inflates the housing value. It does. The VA specifically prohibits in regulations forcing the home buyers to pay for commissions. You know why? Because they say there's plenty of other resources available to do it. And there are the programs I'm talking about. And that's what should be utilized. This will not impact the ability of people to buy homes. It won't. And you know who knows that? The industry knows it. All that will impact are these corporate titans and their bottom line and the money they're making. And people buy homes and sell homes all around the world. You'd be surprised. If you've never been to Australia, you ought to go.
Spoken like someone who's never worked a day in his life in the real estate industry, has never tried to get down payment assistance for himself or for his clients, and has no idea how easy it actually is. Or should I say difficult? Now, there are lots of down payment assistance programs out there, but Mike, let's just look at one that's available in the state of Georgia. It is called the Georgia Dream Loan Program, and it's a terrific program. I've used this with some of my own clients in the past. The standard program says that all eligible homebuyers may qualify for 5% of the property purchase price or a maximum of $10,000, whichever is less. So what is the typical home price now? I guarantee you it is not $200,000. So the maximum is $10,000. And if you are a public protector, educator, healthcare provider, active military, you can get 6% going up to $12,500. If you have someone in your family with a disability, again, 6% rather than 5%. But here are the requirements. You have to be a first-time home buyer or not have owned a home in the last 3 years. You have to have an annual household income of no more than the max for the area where you live. And in my area, it's a max household income of no more than $92,000 for a family of 2 and $105,800 for a family of 3 or more. The max price for the house can be only $360,000. So yes, programs like this are available, but how many people will actually qualify for that? And how much money is available? What happens when the money runs out? Do they say we have $500,000 available for this program, and when it's gone, it's gone? So then everybody who was a day late, sorry, no more funds. They've all been used. So if just shelling out more money is not the answer to the problem, then it seems like just building more houses would solve the problem, right? If we had more homes for people to live in, that would fix the problem. But unfortunately, it's not that easy either. People are generally against excessive building locally. I know that I see in my local Facebook groups over and over and over people that are protesting all of the neighborhoods that are going up or development around us. They moved out here because they didn't want to be in a big city. They didn't want to have lots of congestion and lots of traffic. They're moving away from the town that's 20 minutes over because there's too much traffic there, and they don't want to be in a place with all of this congestion and all of these people. And then what happens when you have more people? The crime rates go up as well. And the local towns don't keep up with the infrastructure to support all of this building. In fact, in my town, they had to put a moratorium on any new permits for sewer and water until they could shore up the existing systems, because they could not support so many more houses with the existing structure that they had in place. Can you imagine building an entire new subdivision and then they say, oh, sorry, none of those houses will have working toilets because our sewer system is not sufficient enough to support all of these new homes. Sorry, I hear outhouses are a really great alternative. They end up with lots more traffic and not enough traffic lights, so people get into accidents, and then there are fatalities, and then the citizens get so angry and start saying, why? Why are we building and building and building, but we have no plan for it? We just have urban sprawl going on, and we don't put together a comprehensive plan to support all of the new housing. We just build the housing and then we worry about what's going to happen after the fact. That's not the way to go about it. That's not the way to do it. If you're on your city council or your planning and zoning commission, you guys got to be better about having a plan for all of this growth instead of just building willy-nilly because you want all the money that's coming in from permits. And the least of our concerns is that when we flood the market with all of these new homes, it devalues the existing home prices. And there's not a single homeowner out there who is in favor of losing their property value, right? Every homeowner wants their property value to remain stable or increase, not go down. So it seems to me that we need to put the brakes on companies that are turning single-family homes into their private cash cow. They get to trade them on the market just the way they do stocks and bonds. They are buying real estate because it is a wise investment where they will have a huge return on their dollar. What do you think? Tell me in the comments if you think that this would work, or are we doing something wrong by telling who is allowed and who is not allowed to buy residential real estate? Tell me what you think. I feel that buying residential real estate has become so attractive to these institutional investors because rents keep going up. So it is a wise use of their money. They are not doing it to provide housing for people who need it. They have no altruistic intentions. It is simply a business decision. It is profitable, and so they're going to do it. And they're buying up these homes and building new homes because they will make a great return. They can show their shareholders, look how much money we're all making. This is a great thing. Rents have gone up, home values are high, and the government seems to be doing whatever it can to keep it that way. Maybe because the government wants to keep these institutional investors happy. I wonder if it would have anything to do with who their biggest campaign contributors are. I'm curious to know that. But the majority of realtors that I've spoken to, and even a lot of consumers, are against corporate entities owning residential real estate. I think that that's got completely out of control. Prior to 2020, something like 1% of all homes were owned by institution, and that number is growing every single year. And it's not going to stop as long as it's profitable for them. So when do we stand up and say enough is enough? We need to be more concerned about our private citizens who would like to become homeowners and less worried about these big corporations who have more money than God. And at what point do we just say, okay, enough? You own enough real estate, no more. And if you're still not sure what all of the changes in the real estate industry mean for the consumer, watch this video next where I tell you exactly what it means for you, the consumer, whether you're thinking of buying or selling real estate.